All right. Hello, everybody. It's your host ABJ here. Welcome to Quant Data Q&A Market Prep. We run these every Wednesdays and Sundays, 5 p.m. PST for you guys, so you guys can ask questions. We can all learn about the data together, learn how to utilize the tool, learn how to read the data, and get some of those questions answered, because I know there's a lot of new faces here today. Just put on my glasses so I can see better. Yeah, we've had such a great week so far. Monday was green. I'm only referencing myself, of course, but I know a lot of you guys, we trade the same thing. So Monday, green. Yesterday, very green, right? Hit profit target 3x, so 3 times profit target. And then today, not bad too. We surpassed profit target as well. And so hopefully you guys are doing really well, understanding data. You know, I think seeing a lot of you guys trade together now, you guys are starting to see the same things that I see. And so that tells me that you guys are very quickly picking up on the data, are very quickly picking up on understanding delta, gamma, Vanna, the 3 main buy-side Greeks, understanding net drift, right? I think if I were to ask you guys, you know, a month prior, you guys would know. I have no idea what the hell I'm talking about. But now, you guys are all professionals. So, quick cheers. You know, I've got this Monster Irish cream. So cheers to you guys. Got green in the chat. And for those that are still struggling, well, you guys will get green real soon. Stick around a little longer. We're going to see how we navigate this market. And yeah. So today on the agenda, damn, this is pretty good. What the heck? I didn't expect it to be so good. Today on the agenda, not a whole lot, but really important stuff nonetheless. It's always important when it's coming from me. I'm going to recap today's price action. Right, I'm going to tell you why I shorted 9 minutes into the open. Okay, we're going to talk about looking for individual strength. Right, you guys saw that we traded Tesla today via TSLL. And then at the end of the day, I decided to sell some spreads, but backtracking it a little bit wasn't the best idea to sell it. It just seemed like it wasn't too far from where low of the day was. Volatility was already so contracted. So yeah, so I don't know if that trade. If I were to go back in time, I probably wouldn't have put it on, just because it still kept me in the seat, kept me in the market. It was a winner. It did expire worthless, but the probabilities weren't the highest. Weren't the highest today. So, if you can't hear me, you can't hear me? That's not good. I'm recording and everything already. Test. Let me bring myself off stage and come right back on. Test. Are we good? Is it working now for you? Discord doing funny things, I guess. Maybe. Discord, come on, pick it up. Pick it up, Discord. Try restarting your Discord if you can't hear me. You'll also notice that I changed my Apple to green. It's because I'm on a green streak. 6 days in the green. And I think should be on my way to breaking the record again. Going to 8 days green. We're going to try. Our best and trade very much the same. So, today's PA. Who here caught the morning short with ABJ? And, well, a lot of us. Who caught the morning short? Who opened the day and was like, oh my goodness, we are already at MVC. Beautiful, 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 beautiful. So this is the day. This is today. Let me just change this so we can all see vertical line. This was today, right? Would have changed this to purple. Actually, we're going to change this to like, I don't know, white, a little bit clearer. So, morning open. I said, right? This is where we opened at, 5,900. Right there. Now, why did we say, okay, because we've seen this scenario before, right? So let me show you exactly what the scenario that I'm talking about. So we're going here. We're going to change this bad boy to... this is not the tool that I'm looking for. I think it's this tool that I'm looking for. Exposure by strike, info map, yeah. Yep, we're going to delete this. Delete. Delete. Yeah, so May 14. Right now, again, we've seen this scenario before. This is nothing new. So right here, we have delta, gamma, and Vanna. And so right from the open, we could see that we were already, where are we? Right here. What do we see, boys? What do we see? Do we see that the most exposed strike is behind us? Right? Because I see it. So we've seen this before where generally we understand gamma to be the magnet for price. And when the magnet for price, we've already opened above it, what is the likelihood that we push beyond it? What's the likelihood that the market's going to allow us, or not allow us, but push us further than where we are already, when this is already what they wanted, right? The market wanted 5,900, right? And so that's why, as soon as the market opened, right, I was like, okay, this is probably the top already. We're already kind of done. We're kind of already done. It's 18%. 18% that we end the day higher than MVC, or in this case, because it's bullish gamma. Bearish gamma and the day lower. So it's only an 18% chance that that happens. So understanding that, what is our probability of success shorting from the open and making sure that we don't actually go beyond 5,900? You have an 82% win rate if you sold call credit spreads, right? Because there is a chance that we hover, right? Who remembers the full metric? It's 54, 18, and then 24. So 54% of the time we pivot, and then 28% of the time we actually hold 5,900 within $5. How do you calculate that? I did that study. I did a study on my own. Ran the test over 300 trades, where we, whether we went beyond MVC, held MVC within $5, or pivoted. So that was my own tasty mechanics study that I did for everyone. But I needed to know it because that MVC was really important, right? So we were already at MVC. Right? Again, we understand the market, that we don't go any further. Probabilities of us going further than MVC is only 18%. Right? So the likely trade is downside. Now, I know we went up a little bit. What, $6? Is that enough for your trade? What's the risk to reward here? Right? We've already hit the target. How much further can we go? Now, we could... right, we could absolutely go to 5,950 if it was the new target for price, but it never became the new target for price. Right. Not only that, show you net drift really quick. So my exact entry for the short was 6:39 a.m., 9 minutes into the market session. Okay. Why 9 minutes into the market session? Right here. right here. What is this? We all love to see this. It's the net drift. Net drift crossover. Calls came in the morning. Sure, that's great. There's not a lot of calls. Not a lot of puts sold off. Overall, right at this point, 6:39 a.m., we had the difference. The tilt was starting to taper off for puts. So we saw this. That's when I entered that ES short. Took a pretty good payday right from that. And then all day afterwards, we just kind of hovered, right, in this range. I know it's quite a wide range for such low volatility. So the high of 50,906 to a low of 58.73. About 33 points. Now, there was definitely some trades, a little bit scalpy, that we were able to take advantage of. But why do we think that today we didn't do a whole lot? There's a couple things that we got to think about, right? We've had 2 really strong days already, right? 2 generally pretty strong days of just upside, right? Today is the day where we just do nothing, right? Also, what's happening tomorrow? Who knows what's happening tomorrow? Who knows it? Papa Powell, that's right, man. Poppy Powell. We have... Hey, what's going on here? Look at this. It says Fed Chair Powell is speaking all day. I don't know if that's true. I don't think that's correct. Yeah, it should be pre-market. But nonetheless, that's pretty important. We also have PPI. This is huge for the market. So we got to digest this. So that was what my thoughts were as to why we were just going to chop around today for the rest of the day. We weren't going to get a whole lot of movement, which is also what led me to sell those put credit spreads at 58.60. Nonetheless, the expired worthless, again, I did win on them, but they weren't the best trade idea at the time. Would have been much better off selling calls, honestly. But, I don't know, the brain works in mysterious ways sometimes. So, Powell speaking, we already had 2 days of juice, right? We can't have, the market generally doesn't have, on a broad scale, multiple days of just straight upward momentum, right? It has to settle. It has to make some room for the next move. Catalyst, obviously, PPI. Poppy Powell, right? So if we look here, another interesting thing to look at is that there's interesting strength, right? So look, this is the heat map that we have today. Mag 7 obviously dominated. Do we rotate towards the rest of the market tomorrow or the days prior? Or sorry, not the days prior, in the couple days into the future, so Thursday, Friday, maybe Monday? Do we lose a little bit of strength in the Mag 7 and then some money comes back into here? It kind of needs to if we were to continue this bull trend, right? I think you guys know I'm super long right now on Tesla via TSLL. I have a ridiculous amount of shares. But if we get a little bit of a lackluster Mag 7, the market still has a chance to move up, right? If money starts flowing into these other names. These other names lead the market as well. It still needs some juice, some money to go forward. So I think that's what we look for. So 2 days ago, we've had just green everything. Yesterday, green everything. Today, just Mag 7's green. Okay, so we're starting to see that slow down. So now, what we should be looking for, going into Thursday and Friday, is looking for individual strength, just the same as we did today. Today we look for individual strength. Mag 7 clearly. Again, we day traded Tesla. Rizzler day traded Google, right? Nvidia was a great day trade as well. Just I think tomorrow is probably going to be very much of the same. And that's how you kind of think about the market. Now I want to go into yesterday. So yesterday, we had a really, really interesting day as well. Yesterday, we called for 5,900, right? ABJ called for 5,900. What was yesterday's high of the day? Da-na-na-na. Da-na-na-na. Right here. Right? A little bit surpassed 5,900. But how did we know that 5,900 was the target? How did we know? Right? Is it magic? Is it magic, or am I just a genius? I don't know. Right, I'm going to zoom this back out to yesterday. Global ticker filter. Oh, I got to change all these things. Oh, I don't want to do that. Let's do this instead. Let's go here. Let's go yesterday. Let's also open a net drift. I'm just so used to this now. I'm very good at this. Very good at navigating this bad boy. And then I also want to show you guys a couple other things as well, aside from a net drift. And sorry, give me 1 second here. My filter. There we go. So this was yesterday. This was yesterday. What do we see? What do we see? Do we have an ABJ trifecta right from the open? Right from the open. The trifecta. Delta. Kablamo. Gamma. 5,900. Top of market. Vanna. 5,900. Top of market, right? This one, 5,800. I know some of you guys were like, oh, it's kind of showing a little bit, but it was not. Vanna MBC interest was also 5,900. Right? Is this, who understands this so far? Right? We wanted longs yesterday. Very clearly 5,900 was going to be top of market. Net drift. We can see the divergence right from the open. You can already see it for yourself. Remember, we like to mark 1 million. Okay, $1 million in difference. And we already had it right from the open. It pretty much held over 1 million the entire day. Right? It got to a ridiculous sum of almost 3.5, 4 million in difference. Oh yeah, like right here. Right here is 5 million in difference. This was an overwhelmingly bullish day. Right? So I know that we went long. I know a lot of you guys went long. I went long. Right? This is why I had such an amazing day yesterday. 2,300 buckaroos. It was a one and done. You just went long in the morning and you just held it through. And that was it. There wasn't much that you needed to do. 5,900. Again, we surpassed it by a little bit. But we went right back into the zone. Right under 5,900. So I'll show you what happened when we got to 5,905. So this was 1034. Right? And sometimes the market is just that easy to trade. I know there's a question there. Let me answer it later. So here we are. What do we see? Right? You guys all understand this. That we don't go further than where the most valuable contract is, because it is the primary magnet for price. It shows where the market's interest is. It takes a lot of effort for the market to push. So why would the market push further than 5,900 if there's no value for them to be had? Right? Makes sense so far? Loving it? Right? Who went long yesterday and just profited, called it a day early? I did. I definitely did. So I've got a question here in the chat. Let me just ask. Are these Q&As recorded? Yes, they are. This one's recorded. Some of them I'll like clip them instead. But then I found that it's a lot of work to do that. So some of the other ones I'm actually still working on like clipping through them. But I'll just post this one up anyways. The entire thing. It's not that long. So far I've only recorded 20 minutes, so not too bad. So yeah. There's your answer. Why didn't you go long directly on Tesla instead of your long on 2TSL? I'm guessing you're saying TSLL. Sounds like you're pretty new. So TSLL is a leveraged share. It allows for 2 times the gains or losses of Tesla. So if Tesla moves up 2%, TSLL moves up 4%. It's a leverage asset that is built for day traders. So I trade a lot of leverage shares. I think you guys know that now. A lot of leverage shares. We're going to go into that when I talk about SRS, scenario or risk structure. Okay, the great thing about leverage shares is there's ways you can save yourself. Not like futures, not like long options. Too many people trade long options because Wall Street bets told them so, but that's not actually how you trade the market. So that's why if you want to learn about leverage shares, good old Google, man. You'll learn a lot. But welcome to the chat. Welcome to Quant Data. Welcome to my stream. It's your boy ABJ. Yeah, so there you go. Leverage shares are great for day traders and swing traders. So I hope that answers your question. But yeah, that's what I wanted to go over for the market so far. So that's what we had. This is why we took 5,900, right? It's as easy as that. Today, we knew the market was going to chop around, look for individual strength. We had a target, though. Target was still 5,900. We shorted from that because we were already there. And we dig into our trade structures, our knowledge about MVC probabilities. Okay? And now we're looking forward. So forward in time, we have obviously Powell speaking tomorrow, PPI tomorrow. That's going to be huge for the market. I'm pretty confident that on Friday, let me see here. Friday, we have this annual new housing, Michigan consumer sentiment. So after this, after 7 a.m., so 30 minutes into the market session, we should have digestion. Now, I know that there's a chance that we go further, but it is still OPEX, 100%, you're right. OPEX expiration on a Friday. Here's what I'm thinking. So, I want to dig into this a little bit. So, this is my filter so far. Give me 1 second here. Filter so far. And I will dig into this, the scenario risk structure, before I enter actual questions. I'm pretty confident I can get to it today. But here's the filters I have so far. Right? What do we see? It's generally all calls. It's all calls. Oh, video voice issues looks like. That's not good. You guys can't hear me? Test. No? Can't hear me at all? Yes, working fine. Oh, I think Godspeed, it might be Discord. You might want to restart Discord because I don't know what's going on, but some people are having like weird audio issues, but a lot of people it's working fine. I'm listening to myself on my other phone. It sounds fine. It is recorded. So don't worry about that. My new microphone is coming. So I know my microphone is actually broken. Weird, can't hear video. Okay, that's weird. Sorry, man. Yeah, I don't know what to tell you. It seems to be working for me. Levi bought. I wish, man. Levi doesn't buy me anything, dude. You guys are the worst colleague ever. You ask him for coffee, you ask him for lunch. He's like, oh, I forgot my wallet, man. I don't have my wallet, bro. Bro, where is your wallet? Why do you never have your wallet? Just give me your. I thought you had Apple Pay on your phone. Just pay for my lunch one time, Levi. Just one time. It's gonna be on the internet for everyone to see that Levi is a cheapskate. Cheapskate! Doesn't like to buy his colleagues lunch. Unbelievable. Okay, cool. So, again, I just wanted to dig into this. So, we always want to keep an eye on who's risk on, who's risk off, what the market's doing, who are the big confident players. So, this is my filter, consolidated order flow. You can see that put call premium. Look at this. Look at this premium ratio. Right? 4.3 million in puts today. 53 million in calls. Right? This is filtered for tech. You can see the majority of the interest is for Tesla. Tesla. Look at this. Tesla. All these unusual orders. Golden sweeps too come in for Apple and AMD MSTR. Let me show you what yesterday looked like. What do we see? Tesla. Palantir, Meta. And then everything is NVIDIA and Tesla. Let me show you one more day. Oh, not this. Sorry. Go back to me 12. Tesla. Right? Look at that. So this trend is still here. That all these calls, everyone's still interested in calls. So until this turns around, I don't think that we should be looking for a major short. Right? I know it's OPEX on Friday. So yes, we could stall out for Thursday and Friday before we get another big move. What are these people targeting? May 30th, June 6th. We saw some May 23rd, so next week. So on a longer time frame, further out in time, we are looking for upside, further upside, because that's what people are buying. Now, if we go back on the chart here, you can see that we're only, 6% away from all-time highs again. I think it's doable. I definitely think it's doable. There's definitely that interest. I mean, the market as well. We're not, we're finally not... Oh, what is going on? Why do I keep dragging it? It's not looking good. We're finally in an area where the market is actually green for the year. So this was a crazy recovery. Down here, we were in extreme fear territory. Right? Let me show you. Extreme fear territory. If you didn't buy the dip when we were here, I don't know if you should still be trading. You should really determine whether trading is for you. Because we went from extreme fear. 1 month ago we were 19. We went to a low of 13, a low of 3. And now we're in greed. We're almost extreme greed area. Okay? So there's plenty of room to go still in this market. And where's the room? Where's the interest? It's for Tesla 370. Tesla 450. We saw that order last week. NVIDIA 150. NVIDIA 145. We saw a big golden sweep today for 139 for NVIDIA. So there's definitely a lot of opportunities. So keep diligent. And I'm pretty confident we continue upside despite what we're seeing here. So any questions so far from you guys? What's a golden sweep? Eric, you can take a look at all the different orders. There's unusuals, there's opening orders, and then there's golden sweeps. Golden sweep is generally the most aggressive order. It's the order that takes on all the contracts. I don't want to go through it here. That's public information. You're welcome to search that up on Google. And yeah, so any other questions where you don't understand things? I'll give you guys like 1 minute before I go over this one. Scenario risk structure. Now, I want to go over this one specifically for today because I know some of you guys are struggling a little bit on understanding the scenario of the market, what kind of risk you want to put on, and what are the trade structures that allow you to put on risk. While I have more of this monster beverage. It's pretty damn good. Again, Irish cream. Who's finding value in the stream so far, though? Let me know. Are you guys learning? Are you guys getting becoming better traders? Right? We run these damn things for free. You know, I don't know who else be doing it. I don't know who else be doing it. What other order flow platform be doing this? I have no idea, man. But you let him know. You let him know, man. ABJ is a swell guy. He a nice boy once in a while, right? He deserves some fried chicken tonight. I don't know if I'm gonna get it, you know, because apparently we're on this summer diet. But I've been trying to follow it. It's not been good. It's not been good, man. Well, hey, with that being said, obviously I don't want y'all to, you know, Debbie glaze me. But if there's any feedback you guys ever have or suggestions, like, let us know. We're always willing to accommodate. We always want to learn and see what you guys want, right? What do you guys want to see, right? I know that sharing positions and things like that and talking more, learning about news, like that's, I'm going to do what I'm going to do. But I want to see what you guys want to see too, right? So I can accommodate you guys. I feel like what I do so far is not too bad. My wife's home. Do you want to say hi, Carmen? No, she did. Oh, she doesn't like you guys. She said no. Okay, cool. Scenario risk structure. So, what are the 3 questions that we always say when you're looking for a trade? Because I know that some of the questions we're getting is like FOMO. We're talking about a lot of people making itchy trades, right? What's an itchy trade? It's a trade that you put on for no reason. It's just a trade that you're putting on to participate. Remember that in the market, it is you versus you, right? It is you versus yourself. No one cares about your position, right? It is just you staring at the charts, staring at your P&L, staring at your trades, and telling yourself, trying to justify those trades. Right, too many times, especially during times when I run my mentorship, I can ask someone like, okay, why are you putting on this trade? And they'll give me this flimsy answer like, oh, I saw this, and then, I thought like it was going to do that. That's not good enough, right? You always have to imagine, there's 2 tactics, there's 2 ways to navigate the market mentally, in my mind, that helps determine SRS, scenario risk structure. One is to separate the trader from the person that you are. Whoever is in the seat staring at the market is the person that you hired to manage your money. Okay, that's me, ABJ. The person that is out of the seat, he's William. He's just some guy. Just some goofy guy, hanging about, hoping that this ABJ guy makes him some money, right? The other way to manage yourself mentally is to pretend that you have someone beside you, okay? And they're constantly asking you, why are you putting on this trade? And you have to justify to this person. Just pretend it's like your coach, your devil on the shoulder, right? Angel devil, you know that thing? But you have to be like, hey, I'm putting on this trade because of these reasons. And you have to, make sure that those reasons make sense. They line up with what you're seeing in the scenario. So first thing, right? What is the most likely scenario for price based on what you see? Again, in the chat, we always see this, right? People are just throwing on trades for no reason at all. That's a very easy way for you to get rinsed in the market, right? We saw it today, right? How many people tried to continue buying long in the chat today? I'm not going to point any fingers, but I've seen it, right? I've seen it. And then how many times do we get these traders who come and ask, oh, is this a good trade idea? You're going to ask me. You should ask yourself. Do you want to put on that risk? If you're already asking that question, it's probably not a good trade to put on, right? I'm not here to press your buy and sell. That's for you to do. And the faster you learn that, the faster you actually become the trader that you say you want to be, right? We all want to trade. That's why we're here. That's why we're in the markets. But you have to tell yourself, you have to prove to yourself that you're actually here to participate at a high level. Otherwise, just give me your money. Give it to me, man. You're going to throw it away anyways. I need some money. My allowance is like $12.50 a week. It's not enough for lunch. 12.5 USD. Yeah, man. Allowance. I always make that joke. Some of you guys who know me in real life, you guys already know. My wife really does control all the finances, but it's a good thing. I set it up that way so that, if it was up to me, man, I'd spend all our money. Spend every dollar. Hello.
What BS are you spewing?
No, it's true. It's true. Okay, cool. So, second question, right? Once you've determined what's the most likely scenario for price based on what you see, we see, is it worth your participation? Is it worth your risk? Right? For example, if you see SPX, you think it's going to move 5 points. Is that in your trade structures? Is that worth your risk, your participation? Now, there's no right answer, right? I would say it's not. If I'm expecting price to move from 5,900 to 5,905, like I wouldn't put on a trade for that. That seems kind of dumb. But it might be for you. It depends on what your A+ setup is, right? What is your easy money trades? What's the trades that you can absolutely count on to pay your bills? Because we're not here to throw money away. Whatever you call out, oh brother. There's been days where I call like massive ripper losses, so I wouldn't trust ABJ that much, right? So this is for you to determine. And then number 3, what is the trade structure that best allows for this setup? Now this question, it kind of depends. Like this is one where this is more. These 3 questions, SRS, is generally catered towards stock and options traders. I will say that. But you could still use it for futures, right? And that means like your trade setups in terms of like, I kind of break it down into the totem pole. I think you guys already know that. Here's the totem pole. Totem pole of trade structures, right? And it depends on how risky you want to be. One is credit. Least risk. I've gone through this before, but it's really important to go through these again so that you guys understand. Leverage, shares in general, right? And then we have long options, futures. Futures is kind of, it does. I will say futures is the most risky trade asset that you can do. The most risky trade structure, trade instrument that you could do. Reason because, well, they're mainly day trades, right? The leverage is incredibly high. There's no way to save yourself, right? For example, we all know it now, right? What's one way you can save yourself? Once you buy a bunch of TSLL going long, like I did today, if I'm wrong, what can I do? Sell covered calls. I can sell covered calls to recover myself, right? Can't do that on long options. Can't do that on futures, right? So these are the 3 trade structures. Now, if you see, for example, this day, so if we go back to yesterday, right? This is the open, okay? What's the most likely scenario for price based on what you see? Right here. Tell me right now, who sees it? Well, in my opinion, the most likely scenario for price is upside, right? Now, how much further do we have to go? 50 points. Is that worth your risk? Right, we're asking this question. What's the most likely scenario for price? SPX to 5,900, right? That's the target. Is what you see worth your participation? 50 points? Yes, it is worth my participation. Right, we're marking these off. How come I'm typing so bad? Participation. Okay? What is the trade structure that best allows for this setup? Where we're just long, right? Now, go through the trade structures. Credit. Sell puts. Aggressively, right? Go long on UPRO or Mag 7, right? Long ES, long SPX calls, let's say. These are all the trade structures that you have for yourself. Okay? Use all your trade structure that you have for yourself. Now it's up to you to determine which one is worth. Right? Now I know you guys know how I like to do things. I like to finance generally my my trades. So if I see 50 points up, that's just me though. That's how I like to trade the market. You guys can do whatever you want. It just, for me, it seems like a better way to navigate it once in a while. Just in case, you know, you lose on these leveraged shares, or in case you're wrong. Sell puts, right? Collect the credit, let the market pay you first. Take that credit and use that credit to buy long options or long shares. Right? So we're essentially financing, we're letting the market pay us first so we can finance the debit trades that we want to trade. That's usually how I like to do things. Yesterday, though, we didn't do that. We just went straight long ES because it's a little bit too fast. Things happened too fast for me to want to do that. But yeah, that's one way to do it. I also know that later on I ended up selling put credit spreads anyways, and they did pretty well. Right? Obviously, the entire market was long. There was no reason for us to believe that we'd revisit open price. So we sold open price. We sold $10 above open price because volatility was already kind of depleted by then. That's all the ways that we can trade the market, right? So SRS, really ingrain this into your brain. The more you run through these scenarios, the faster you'll be able to kind of, the faster you'll be able to do it, right? Because a lot of people can't justify their own trades, and you need to justify your trades if you're going to navigate the market. If you're going to participate at a high level, you need to be able to justify your trades, because you're going to continue trading, right? And then this actually helps you put on less as well, right? A lot of those itchy trades that we see, even myself, right? I'm guilty of it, putting on itchy trades. You'll find yourself putting a lot less of these itchy trades and breaking those bad habits the more you run through these questions in your mind. So it makes sense for everyone so far? Again, this is SRS, scenario risk structure. Everyone does it a little bit differently, but this is something that I'm going to actually do a big article on. Yeah, that's it. I'm leaving 7 minutes now open for you guys to chat, ask questions. What questions do you guys have? I'm going to cut the stream. Cut the recording.